Price action. Price action is an approach to, as much as you can, predictions and speculation, price predictions and speculation. It's used by retail traders and anyone looking to engage in the market to try and find some order in what seems like chaos, to be honest. This is the structure of a price chart for those of you that have never seen a price chart before. You can see that the price action here points to these what we call bars. You can see we have green bars and we have red bars. Now, price action in itself will help you understand the direction that the market is taking. In the previous section, I touched on direction of the market. You are looking to understand which way the market is going so that you can, as best as possible, look to be following the market. So if the market is going up, what you will see is you'll see a sequence of bars that are gradually moving up on the chart. So therefore you would only look to be taking potential buying opportunities rather than going against the overall trend. In the next section we'll look at cyclicity and the minimum standards that you like to see in order to, on a high probability basis, be able to determine the direction of the market. But you see here we have green and red bars, and we'll talk about the bars themselves in a bit more in depth very shortly. Also on the chart you will see a yellow and a blue line, or any line that is plotted onto the chart for you is what we call a moving average. Down at the bottom, depending on the charting software you're using, in this case it is this is a snapshot of the Smart Chart software. You can see the tabs along the bottom, which are called the chart tabs. Any price chart that you'll be looking at, which shows you the overall price action, will show you the date and the time across the bottom. So this is a unit of measurement, and also a unit of measurement for the price over here on the right hand side. So each bar, or a part of the bar, will determine a price point over on the right hand side. The individual bars themselves we are teaching you with OHLC bars. OHLC bars stands for, or OHLC stands for open, high, low and close. What this means is you see the left hand tab to the side of the bar corresponds to a price that the bar opened at. During the period of time that the bar shows, it will show you the high that the bar pushed to. So this would then mark the high price. The low that the bar reached during that period of time would show you the low, and then where it closed over here on the right hand side, this gives you the final price. So let's say, for example, that this OHLC bar gave a description of the price action, so the action the price took on a daily price chart. This bar would be worth a period of 24 hours. So that means within a period of 24 hours from the market open, the market opened here at 1.4050. It pushed to a high of 1.4095, down to a low of 1.4000, and closed finally at 1.4075. The fact that the bar is green, it means that the bar closed higher in a positive way, more than where it opened. And if it's a red bar, it describes that the seller's bar, so the sellers managed to push the price down within that 1 day period, or if it's a 4-hourly chart, the bar will determine what happened in a 4-hourly period. If it's an hourly chart, for an hour, and so on and so forth, the price opened here, pushed to a high, pushed down to a low, and closed lower than where it opened. So green if the close is above the open, so the buyers, one in this case, and then in the second case, red if the close is below the open. The price action within the individual bar itself does not mean that the market is going up or down in this case. It just means that the buyers happen to win the battle between the war between the buyer and the sellers, and in this case the sellers won versus the open price. What you are really looking to see, rather than the individual bar itself, is you're looking to see whether the sequence of bars is telling you the story. In terms of time frames and time frames that you can trade on, the price action that you can trade with, these are some examples of the different time frames you can look at. If you're looking at a weekly, a monthly price chart, then the bars themselves will show you what happened in that one particular month. This is what we might look at as an investing time frame to look at. So your positions might take a lot longer. The higher time frames would be for hourly and daily. The 1 hour, 30-minute and 15-minute are examples of what we call day trading, or as traders we like to call that intra-day trading, and scalping would be something you would do on a 1-minute or a 5-minute chart. But as a new trader, something like scalping can entail a lot more risk. So you're much better off looking at higher time frames for the trading strategies to react a little bit slower, so you can make much more calm decisions, and then speed it up on the 1 hour, 30-minute and 15-minute, but you will always be led by your higher time frames on the daily and the 4 hourly.